Have you ever stopped to think what actually keeps powerful executives from doing whatever they want with a company's money? When millions, sometimes billions, are at stake, what invisible system is supposed to protect employees, investors, and the public from abuse? Most people think corporate governance and risk management are abstract ideas meant only for boardrooms and legal documents. But the truth is, they were created to solve a very real, practical problem long before they became academic subjects. To see this clearly, imagine something simple. You lend money to a friend and ask for regular updates on how it's being used. Without realizing it, that single action already follows the core logic of corporate governance and risk management: oversight, accountability, and control. This is the Learning Studio, where we break down powerful ideas in accounting and finance in the simplest, most intuitive way. What's actually happening in that situation is straightforward. You're setting rules, demanding transparency, and protecting yourself against uncertainty. That combination, how decisions are supervised and how risks are controlled, is exactly what corporate governance and risk management mean when explained formally. The same idea operates at a much larger scale in the real world every single day. Boards of directors oversee executives. Independent auditors verify financial reports. Risk teams monitor threats like fraud, market crashes, cyber attacks, and regulatory failures. When companies ignore these systems, history shows what happens. Scandals like Enron, Satyam, and Wirecard didn't fail because they lacked profits, but because oversight collapsed and risks were hidden until it was too late. Corporate governance ensures companies are directed ethically and transparently, while risk management ensures they are prepared for uncertainty instead of being surprised by it. Together, they protect long-term value, not short-term appearances. A company can survive bad markets, but it rarely survives bad governance. This framework wasn't created by one individual. It was shaped over time and formalized through global institutions and standards bodies such as the Organization for Economic Cooperation and Development and the World Bank, which developed governance principles, risk frameworks, and accountability standards used worldwide. Their work transformed basic human instincts, trust, oversight, and caution, into systems that could be regulated, taught, and scaled across global corporations. Now that you understand the intuition behind corporate governance and risk management, the next natural step is to explore financial institutions and global banking systems, where these governance and risk rules are tested under real economic pressure every single day. Stay curious, keep learning, and continue the journey with the Learning Studio. I'll see you in the next episode.